Good morning, everyone. I'm pleased to be here and have the opportunity to attend this conference for the first time and talk to you about U.S. office. And I want to thank Paul for paving the way for me, because what you'll hear from me today is I share his optimism on office. And I think when you look at the market today, I want to say that 2024, we'll call the bottom for what I'll call high quality, well amenitized, transit-oriented office. I think we're going to see some really interesting opportunities, and 2024 and 2025 going forward is really going to be one of the most interesting entry points we've had for investing in office since the global financial crisis. Big middle one, all right. There we go. All right, so just, again, I think we're seeing really signs of improvement within the office sector, during 2024. And a lot of what's driving that improvement is, when you look at it today, is first you have to peel back the onion, because when you look at the statistics at a very high level, market by market, it seems a little scary with vacancy rates, high in a lot of the markets today. But when you peel back the onion and you look market by market, sub-market by sub-market, what's common across the board has been what we've all been talking about, is flight to quality. And I think the top end of the market, which I define as, the Class A, the new high quality trophy assets, and then what we're starting to see today expanding into the Class B assets, that is materially outperforming the broader market when you look at that. And I think what's driving that outperformance, first and foremost, there's been a dramatic decrease in new supply, new construction starts, across every market in the nation. And now, with a rapid increase in return to office over the last couple of years, really driving utilization, that companies are looking more and more and putting pressure on space at the top end of the market. And for the first time during 24, we started seeing real rental growth back in the market. Just covering on the debt capital markets for a quick minute. If you really look back over the last 3 or 4 years, the debt capital markets for office have been extremely challenged. Very little liquidity within the market. None of the banks wanted to refinance, an existing office building that they weren't lent on. People were just working their way through problems. We started to see an improvement during 2024, especially as the CMBS market started to expand again from a lending perspective, and we started seeing a lot of buyers on, from the CMBS side, bond buyers coming back into the market. We're optimistic, speaking to a lot of the banks in the markets, the insurance companies, and continued expansion in the CMBS market going forward.